Hey everybody, happy Monday. Thanks Scott. Steve, what's shaking over there in your neck
Yeah,
of the woods?
happy Monday indeed.
Indeed, and today is May 13th, ladies and gents, almost halfway through the month of May and summer approacheth. Welcome to another edition of Office Hours. Um, Before we get started here, just a quick disclaimer to make the attorneys rest a little bit easier. I just want to make sure everyone in attendance knows that all the info that we share with you guys is for educational purposes only. Please don't misconstrue what we share with you as a solicitation to buy or sell stocks or anything else for that matter. If you do need investment advice, what to buy, when to sell, all that good stuff, please seek out a registered investment advisor or someone like a registered Series 7 stockbroker that can legally dispense that type of advice to you. So once again, everything that we share with you guys is for educational purposes only. Now, nice little crowd in here today, but for those that might be attending for the first time, just like to take a brief moment here at the beginning of the webinars and let everybody know a little bit about the community that we've built and fostered around the award-winning technology that is TI Pro. All kind of starts up here in the upper left-hand corner. We've got a trading room, and it's moderated by Mr. Barry Anderson. I've been doing it for years now. The trading room just got a new facelift, got some new software that everybody's digging, a little bit more conducive. And the bottom line is this: Barry does an excellent job at showcasing his trades and showing people the way he uses the technology. More importantly, well, I can't say there's really anything more important than Barry in the room, but it's a great place for learning, whether you're an advanced trader or just starting out. 500-600 people in there sometimes a day. And the really good thing, really good point here is that the cost is zero. All right. If you're a TI member, you don't even necessarily have to be a subscriber, I don't think, unless we changed that recently, to get in there and interact and see what it's all about. If you shopped around trading rooms on the web, any of them that are worth their salt, you know that they're not cheap. So just another added benefit to being part of the TI community. If you haven't gotten in there, get on in there, see what the trading room is all about. Of course, today you get myself and Steve, office hours on Monday. Steve is going to take the helm for tomorrow with the Trade of the Week webinar, and he's going to ride shotgun with him. Gets us to Wednesday, good old hump day. We like to bring in the CEO and founder, Dan, and our Chief Technical Officer, Brad. Always entertaining, always interesting. Get to see some peaks of technology that might have just been developed. It's coming down the pipeline. So always a good Wednesday webinar there. The 5 p.m.s, we're going to round those out with Andy's Trading Studio on Thursdays. I ride shotgun with him, and then something completely different for Fridays. Our ever popular Friday support session, starting off at 11 a.m. Eastern, and sometimes going the full 3 hours. So Friday support session is great for anything TI related, whether it's strategy fabrication, simple how-to questions, or anything on the advanced side of the fence too, like brokerage plus, auto trading, back testing. Nothing's really off limits in the Friday support session, so put it on your calendar. We'd love to have you join us on Fridays. In addition to the 5 p.m. webinars, we've got TI University for these guys, Monday through Thursday, all starting at 12 p.m. Eastern. 101 beginners, 201 on Tuesdays, intermediate on Wednesdays, then we wrap it up with advanced 401 on Thursdays, which I happen to teach as well on Thursday. So these are great, whether you're a beginner or intermediate or advanced. If you can't attend the live versions, we have all of these recorded and posted on our YouTube channel because pretty much the content is static. We do recommend that you either listen to the pre-recorded versions or attend the live ones in order, because you're going to need what you learn in 101 to build on 201 and so forth and so on. So all in all for the week, each and every week, we got 9 webinars coming at you. Sign up for the ones you want and you'll be sure and get on the list and get those invites. Once again, just like to showcase response since we introduced AI to the mix of AI of TI products. First AI coming online in 2016. Now we've got not 1, not 2, but 3 different modules, which in the future, by the way, are all going to be reconsolidated back into one. But that's the nature of the beast that is AI and backtesting and all that good stuff, optimization. We're always trying to improve and make adjustments. So we've got some good things coming down the pipe for the AI, as well as something that's a little bit more exciting here, folding in swing test results. Holly having the ability to keep track of multiple day holds, whereas right now it's a fresh slate each and every day, starting over. But in the future, hopefully a not too distant future, we're going to be tracking for the long term as well. So got some interesting stuff coming down the pipe. You can see the subscriber growth 2017, 18, and 19. Or excuse me, 17 and 18. What's 19 going to look like when the year's over? Well, not too big of a jump to think that we're going to be somewhere a little higher than we were in 2018, but we'll see how it finishes. Still got a good majority of the year left. All right, so here we are on the topic list for today. And boy, Steve, not your average SPY action today. So if you'd like to give everybody a peek, I'll go ahead and kick it over to you here.
Sure.
And you're it.
All right. Do you see my screen yet? I don't think so. Hold on. There we go. You see the scream, the propeller hat? That's what some of the longs were probably doing today. What's that?
Or the buy the dip people. Yep.
Yeah, the buy the dip people. Have the Edward Monk scream thing happening there.
Mm-hmm.
All right, goodbye. So a couple interesting things. I think it was a couple weeks ago, we sat here and said, as we approach these all-time highs, interestingly enough, those all-time highs could never get above a closing price. Wick there, gap and close below, wick there. So the market really never closed significantly with conviction above this orange line, which of course was the all-time highs. And so we laughed and we said, well, it's either going to be the mother of all double tops, or we're going to have maybe a slight pullback or some sort of consolidation and push back through. Well, I mean, honestly, I thought last Friday, aside from let's just get rid of that candle there, that's how we closed last Friday. Not bad in a few respects. This gap was eventually filled by the bottom of that wick. The 50-day moving average was recaptured 2 days in a row. Thought that was pretty good on Friday. Over in the NASDAQ land, we also did not have a filling of the gap. We were close. So interesting. I believe that was Friday. Let's just make sure. Yeah. Hang on there. There we go. So today, another giant gap down, and the pretty much the story out there is what's going on with the trade relations / tariff war, whatever you want to call it, with China and us. And it's showing itself up at just an opportune time. When we had 4 days again of failed breakthrough and closing prices above that prior orange line, the prior high. So it made all the sense in the world that we would get some sort of a pullback. And I want to illustrate something. I use my little illustrator here. I love this thing. A lot of times when prices get up at those levels, and we had those 4 days of indecision and inability to close at the levels the bulls needed, it's almost like an airplane. When an airplane stalls from the side, it kind of gets up to those levels, the airspeed dies, and then it starts to what's called buffet. And then we have the nose dips down, and then we have kind of a dip. And then, if nobody was controlling the plane, if you throw a paper airplane, the nose would dip, and that would pop up, and it would dip. My point here of the dip and the pops, this is kind of to be expected. Again, to use the analogy of a plane stalling in the air, it's got really nowhere to go. So the volatility has increased tremendously. The volume that I was kind of bemoaning last 3 or 4 weeks back here underneath the average volume, very light volume, as we just dojied to high, dot after dot. Well, now we have a completely different market once that those 4 days, I think, were tested and declined. They were swatted back here. And so we really had nowhere to go. So back to my concept of Friday, we had a nice gap fill on Friday in the SPYs, but we did not have a nice gap fill in Friday in the NASDAQ. That happened today. So, as we start to have backing and filling, it's normal to look left on some of these charts and see what exactly might be the areas of interest. And I want to bring one more very significant area of interest. We've had a pretty good pullback. I don't know what the calculations are from back here, but it was a pretty significant pullback, the correction. But look at where we bounced today. I've kept this orange line in here for a while because this orange line was something we talked a lot about back here. And let's take a look at what that meant. Oh yes, that's right. It was the three sisters, these three tops right here that we just kept dealing with on a resistance basis back in these parts back here when we were chopping around at these levels, and a lot of mess here. So it's kind of interesting that we've returned back to the scene of the crime. If you look at it in the bigger picture here, we have returned back to the scene of the crime where prior resistance, then we fought through it eventually. But when you return to the scene of the crime, prior resistance can become future support. And therefore, it's a case that could be made today that says, all right, well, that looking left on the chart makes a lot of sense that we've given back. Somebody could probably even do a Fibonacci on this. I don't have the Fibonacci tool, but from the bottom all the way to the top to kind of see how much of a pullback, we're probably getting close to 30%. But the only thing lower that I see here of interest is this 200-day moving average. It's this flat line. Gave us a lot of fits and troubles on the way up at the 200, rejected there, and kind of rejected there, and acted as somewhat support there. If this all-time high, if this pivot line doesn't hold back here from those resistance levels that we had in the summer and fall, this very well could be in play coming up here, this 200-day moving average. Let's take a look at the NASDAQ and the Qs and see what that respective 200-day moving average looks like again there. So let's switch gears a little bit to the interior of today. Not a great bounce. I mean, there was an attempt midday to bounce, but it was short-lived, a very soft dead cat bounce, and then closing back near lows for the most part, definitely in the Qs. And for the most part, a little bit off lows in the spiders. So with that said, if there is more follow through and more downside action, I would be keeping an eye, guys, on this 200-day moving average coming up. But if not, it makes sense. We did fill a gap in both the NASDAQ and the Qs and then spiders. So there's a great case to be made for a decent pullback on the, Mike, you're right. I just happened to look over there. Let's take a look at what the bigger picture looks like. Mike says it might be interesting to look at the weekly to get some interesting perspective, and he is correct, of course. That's the NASDAQ. I want to look at the SPY. There we go. We can see those lines coming into play much more significantly. All-time highs rejected, volume increases, volatility increases, gaps back and forth. The plane has buffeted and now is looking to find its flight plan again. And then that second orange line right there, 1, 2, 3, those levels acting as severe resistance back there on the weekly. Is it going to now act as support? Very good case to be made. The only other thing, like I said, if we go back to the daily chart, it's just that 200-day moving average looming down there. It's getting close. So if we can't hold these levels tonight, we don't get some good trade news overnight and a bid back in the market tomorrow, keep an eye on these 200-day moving averages. Real quickly, as I always do, look at the Russell 2000. This one has been the weak animal of the herd, and you can see it completely gave up today, collapsed below its 200-day moving average. It's actually below all of its moving averages. It's a safe in space at the moment, actually. So the Russell 2000, the small cap stocks are not happy at the moment. And then lastly, the Dow, the industrials and transports, flirting with and lost the battle today with its 200-day. So that's not good. But again, we try to focus on the big picture, the S&P 500 with all these sectors in there that help keep the weighting intact. Big volume. Let's see if we can dig in on this pivot line. If the pivot line doesn't hold, then it's going to be a story of the 200-day in both the NASDAQ and the S&P. That's pretty much all I see today there, Mr. Jamie.
A tale of two indexes. All right, good stuff, Steve. Thank you very much. Let me get it back over here. All right, I think you should be able to see my screen again.
Mm-hmm. Yep.
Good?
Good.
All right, perfect. Thank you very much, Steve. Yeah, so, I know we're just supposed to pay attention to the price and the charts and all that good stuff, but you got to wonder, well, tariffs, trade deals in China, oh my, that's really what's causing all the uncertainty. So we'll see how it goes. Now, as Steve has already illustrated, a significant gap down. We all were sitting here watching the futures over the weekend going, oh goodness, what's going to happen? And we know now as the day is concluded, not that much of a bounce. I kind of thought once we, let me give this back to 15 minutes here. Give me 1 second. As we were watching this action right here, I'm like, oh, there's the close above on the 15-minute. Get ready to bounce and try to eat up half that gap, but nope, wasn't having it. As Steve said, a soft dead cat bounce. Somebody closed back below those indexes to close towards the lows. So, people that were hoping for the big bounce today were not getting that. Now, as far as expectations go today, I was really pleased once again with the compare count window on the large cap side of the fence, because after the first 15 minutes, everybody's thinking, well, we're going to cover that gap again like we did last week, or are we going to head lower? Well, after seeing these readings after the first 15 minutes, I kind of had my mind made up where I was going to focus, obviously to the downside. And, anything above 55% is something that you should really raise your eyebrows at. We got that today, upwards almost to 60%. So anytime you see these type of metrics after that first 15 minutes, well, certainly doesn't mean something all the time, but boy, these things have been dead on all last week, and today's the first day of this week, and more good information coming out of the CC windows on the big caps today. And of course, we all know what happened after the first 15 minutes. Let's just go ahead and take a little look here. 15 minutes on the SPY, so we get this reading after this first candle closes out, and then we can see exactly what the action of the day was. Always got to thank Steve for opening my eyes to the 10-period SMA, because it was well below, and really, you could have milked this trade for the duration, and just by using the 10-period moving average, telling you when to get out, somewhere right around here. So beautiful trade, market directional trade, as we often see the SPY setting up to do. And I might jump around here a little bit. Let's see, where have I got that on my, yeah, we'll wait to talk about trading the overall market. We'll get Holly out of the way first. So a very significant bearish count on the compare count windows, helping us temper our expectations on what to focus on for the day. And then not only did we have that significant bearish count coming out of the compare count windows, but look what Holly was up to today. Which one of these things are not like the other? Only two on the blotter. Two longs. What do we have here? 12, 19 signals and only two longs. So Holly performing well today. You guys probably noticed, as well as myself, Steve, Andy, Sean, everybody that's paying attention, some days on short days, we don't get a lot of action out of Holly. But boy, all these trades today and only two longs on the blotter, and not that big of a trade count, right? So nice short bias from Holly today and some very nice profits. So we can see over here how all of the individual modules finished. We got a little deviation here. Risk off in 1.0, risk on in 2.0, back to risk off again in Holly Neo. So what I want to point out first and foremost is, when the market was down in this area here, myself and the boys, of course, we're always talking during the market hours, and we're talking about, hey, Holly's doing pretty good, short bias. That's what we want to see in a downtrending market on the day. We were just like, yeah, it's a great performance. And somebody made the comment, yeah, but at that point in time, all of these modules were in risk on mode. And somebody made the comment, yeah, but when we get that bounce, risk on's going to take a hit. And we're all like, yep, agreed. But it brought up a very good point, which I'll cover now, and that is, if you were short a bunch of Holly positions or non-Holly positions, it doesn't matter. If you were short either the market or some good equities here, and you're in the money down here, and we're starting to flatten out, maybe that stock itself is about to flatten out. When one of us made that, well, when the bounce comes, risk on's going to take a hit, I just made the comment back. I'm like, yeah, but when you're down here and you've got short money on the blotter, if you're not protecting that money, well, whose fault is that? right? We always have to protect our money, right? So what I did, let me pull this screenshot over here. I was like, okay, I'm going to go ahead and take a screenshot here while these numbers are different. So we can see the finishing numbers here. But at the time, look at what 1.0 was up. 1.0 was up $1.78 with one trade left open. She gave a little over a buck and change, about a buck and a quarter back on that. Now, where was the discrepancy here? And it was in this trade right here, EXP. You can see at the time in risk on mode, up 72 cents, sitting in it, EXP only made 17 cents in risk on mode. Now, here we have the chart, all right? Here's Holly's short, a beautiful move down. Plenty of time to make a decision. 1, 2, 3, 4, 5, 6, and if we include this bar, 7 15-minute periods, right? So over an hour and a half, once it gets down here, if you made the entry up here, you're well in the money in that 70-cent range. Plenty of time to go, it was really good, and now it's kind of flattening out. Maybe, just maybe, I should protect my profit, right? Now, how could we, what could we consult to help us make this decision? Now, here's the daily, and looking to the left. Down here at this level right here, perfectly coinciding with the line over here on the daily, look what we were butting up against, all right? Clearly acting as support on the day. So unless the market just, some macro event came in and huge volume came in, we started plunging again, probably not a bad time to cover, all right? And we don't have to be trading geniuses to look to the left here and identify that area of support, right? So, I'm explaining this to you because you can't get this commentary just by looking at these numbers, all right? But a big difference between what she would have finished or what anybody would have finished holding into the close and having to sit, and watch all of that profit disappear. So just keep that in mind, whether it's a Holly trade or just any other trade that you're in the money on. When things start to stall out and momentum starts to die, that's definitely when we want to think about locking that profit in. So just wanted to point that out, give a good illustration of what you can't necessarily see in these final numbers here. Now let's talk about a little bit of risk on here and how we could have participated with Holly. So let's take a peek. Not really much to be had in NEO since it finished in risk off. We can see no spread between risk off and risk on any trades here, but a little bit different of a story here in 2.0. SM. Steve, I look at this and I'm like, Steve, imagine shorting this one with the risk of high of the day, right? That's the ticket right there.
Hey, before you go into the individual stuff, I always try to remind people, and I take a moment of opportunity to show people the bigger picture of Holly. And, I'm pushing, and I know we're gonna have some sort of a dashboard at some point, but if we had a dashboard today that said, which way is the wind blowing, Holly, in terms of directional bias, I think I counted like 8-to-1 bias short. For every 8 short sells, there was only 1 long trade. And the day really opened up. And to complement Jamie's compare account window that he talks a lot about, you had another confirming indicator, which was the batch of trades that Holly was coming out were significantly telling, and that they were a directional short bias without a doubt, and it stayed that way for hours on end. And so, without getting too caught up in the individual trades of Holly, sometimes we look at the bigger picture. The canary in the coal mine was saying, if you're trying to go long today, that's not what I'm seeing, and I'm a statistically probable AI, and I don't do things out of emotion or guess. I do things only out of statistical probabilities. And so I thought that was a really good opening tell. I just wanted to highlight that for sure.
Absolutely, and I agree 1,000%. Yep, when we see the AI confirming and acting in a sense as to how the compare accounts were functioning, that's like a double confirmation there.
Can't go wrong with that.
Nope. And, gives you a lot of confidence, because, hey, there's never a guarantee in the market, but man, when we see these, reinforcing metrics on top of already some good compare counts, well, it gives us a lot of confidence. And the days where you never have absolute confidence, but the odds were definitely in our favor today on the short side. And if you took advantage of that, kudos. As far as risk on, risk off go today, we can see that SM. I mean, you're going to be hard pressed to find a better entry on a short sell today. Just wicking right above that area of what could be resistance in the topping formation. Beautiful entry, and then never any pain. Right? Can't even see the stop because I don't have my. I don't think I can compress my chart that much. But it's somewhere up there. Let's see over here. We can see it on the daily up here around 1587. Never even really got back above the entry line here. Went sideways for a little bit, and that it's no surprise that it made it through the whole time duration here. At first glance, I thought this was going to be a profit save exit, but no, she made it the whole duration on the topping formation, which if we pull that over here, take a look at 2.0, we can see what that whole time was here. So on topping formation, where'd you go? There we go, 60-minute hold time. So she makes it through the duration. Oops, I got rid of it there. And then, boom, off to the races. So bottom line is this. Never caused us any pain. We're slightly below the entry line. Probably saw the market doing what it was doing. Wasn't that hard of a stretch to go, you know what, I'm either going to keep my hard stop, but this is also something else to pay attention to. When we look at these risk-ons today, and there's only a couple of them, that break-even stop would have kept you in for the day. A lot of the times they don't, when we don't have really, a really good bias one way or the other, but there was a clear downward bias. The CC windows gave us a little chirp, chirp, chirp. Holly confirms, and it's no big surprise to see if you got out right here with Holly, you took your 16 cents, but you could have made the decision, nope, market's going down, great entry, I'm going to hold it, in which case you would have been rewarded handsomely just in the next candle, getting below that 10-period SMA and then staying there pretty much for the duration of that down move. And then, depending on what you felt was going on, you could have got out of half with Holly here, kept the other half, or, maybe even held it for the duration, right? In which case, we've got a healthy 63-cent spread between 16 cents and 79. Plenty of spread to eke out an extra 20, 30, 40, 50 cents or more there. ECPG, pretty much the same. We can see right here, Holly did a little bit better on this one on the risk-off mode. Once again, putting on the brakes. This one had a 60-minute hold time as well. And more of the same. We get a little sideways action before, boom, going down. Holly covers right here. Once again, that 10-period SMA, squishing everything down nicely. So once again, once we got right here, break even would have kept us in. We could have peeled out a half with Holly, said, you know what, I'll risk a break even on my second lot, hope to make a little bit more. Not such a dramatic move once we got out, but a couple of times down here to really add a little bit more to that blotter. Spread's not quite as big as in the SM trade. Had about not quite 40 cents of additional spread in there, but hey, you make an extra 20 cents, 30 cents once you get used to this methodology on every trade that you decide to stay in. Heck, even if it's a nickel or a dime over time, it adds up in a big way. We can take a look at least one more here because it's the patterns that we're interested in, not necessarily how big the gain was, because, some are going to be bigger, some are going to be smaller, only about 19 cents in this one. But once again, look at that beautiful entry there. All right, you're going to be hard pressed to find a better entry. Stock didn't move as much. It's a smaller dollar stock, but not a bad gain on a $11 stock here. Even in risk off, plucking out 35 cents. That's well, this is risk on. So down here, we're up about not quite 5%, but not a lot of brain power needed here. Holly gets out right here. We got a couple of little equal candles here. Buyers and sellers become equal. Getting out of half with Holly, Keeping the other half, using that break-even stop would have kept you in. A little sideways action, and then release at towards the end of the day. So just pretty cut and dry today from Holly. Low trade count, 19 trades, decent profits. If you're paying attention and protecting your profits, you could have done a lot better than Holly Grail on the one big trade that she had here on that ECPG. So all in all, excellent day from Holly. I'd love to see more of the same tomorrow, but hey, whether it's to the upside or the downside, doesn't really matter. But some nice numbers posted by Holly today. Now, of course, as with every day, we've got longs, we've got shorts that are working. So keep in mind, the market in and of itself sets up really well a lot of the times. Now, I know that most people, we're looking at the SPY as the big daddy, and we're thinking to ourselves, well, yeah, the SPY sets up nicely sometimes, but man, it's almost a $300 instrument. You know, I can't really get that many shares. I'd rather find something with lower cost, get more leverage, hopefully make more money. But fear not, because there is a triple weighted ETF to the long and to the short side of the SPY, right? So SPXL is the long side, SPXS is the short side, right? So if you think the market's going to go down, you buy SPXS. If the market goes down, this little guy goes up, right? So this one's set up really nice today. Of course, I was keying off of the SPY, but I do want to point this one out here. And by the way, these are very liquid instruments, so that's nice as well. Went ahead and shrank everything down to 5-minute bars here. So, hey, myself and the boys, we're just like everybody else. We don't have a crystal ball. There's nothing certain, right? So, you know, market opens with these huge compare count readings to the downside. We initially, well, of course, this is the inverse, but we originally went up a little bit on the open. But what do we have to do? We have to give the market time to draw a picture of something that at least makes some type of sense, right? So looking at the SPY in 5-minute, a little up push first, fold back over, keeping in mind massive downside counts. So I'm like, okay, let's be patient here. 5, 10, 15, 20, 25 minutes. 25 minutes in is where the signal occurred, right? Up, up, maybe we're gonna fill that gap. Nope, roll back over, volume is huge, huge CC readings, short here. Of course, this is the SPY. So to shorting the SPY there, we go long here on SPXS. It's a $21 instrument. You can get a lot more shares, all right? And you can see what happened for the rest of the majority of the day. This was the move, all right? We get that range break there. Volume was pumping all day. Didn't really have to look at the single stock window. Knew that the volume was there, knew that sellers were out. And, you know, if we're assessing the risk here, not including the entry bar, 510, pretty much looking at the low of the prior 15 minutes or the low of the day. Would have kept you in nice and snugly. A little up move, a little downturn, and then boom, off to the races. Now, of course, we're looking at 5 minutes because I wanted to illustrate the detail here in the nice snuggly entry. But we just pop it back over here to 15. And what do we notice here? Well above that 10-period SMA up until right here where we broke down, or we could say the market tried to take that dead cat bounce, but it did not last too long. So a really good market directional opening range break trade from the market in and of itself today. Happens a lot, but if you're hesitant to hit that SPY trade or that Q trade, you might want to seek out the inverse or triple weighted ETFs for the long and the short side. Not bad little leveraged instruments there. All right, so let's talk about the market set up in a nice directional trade today. And since the flavor of the day was short, and guess what? It was the, you know, as Steve was illustrating here, the IWM took more of a pounding than anything. So it was not a big surprise to see a lot of the symbols coming through my turbo down family no support. Had the yellow color today, as if I just kind of expand this box, kind of gingerly scroll down. We do have some of the green boys, the big boys, coming through, but they're they're not quite as frequent as the smaller caps. However, looking at this guy today, little wicking action there on one of the bigger boys. I was not in this one, but would not have minded being in this one. Short there for this nice little down push here. Starting to see more green ones come through. Matter of fact, last week, this guy showed up, which if we just look at the prior day, look at that bad boy from Friday, which when I saw this green one come through, I'm like, well, that's unusual. And boy, that was a really good trender for most of the day. And then, if you kept it on your radar, had a nice little pop up today and looks like it's, trying to recoup a little bit. But I was more interested in a couple of these other ones today. AMRX was a really good one, and BNE. So let's just take a look at those. AMRX, here we are looking at the 15-minute. We can see that perfect range break right there. High was up here. Low was down here. What do we got here? 1, 2, 3, 4, 5, 6. About an hour and a half into the market, we get that low print there. And what do we have right after that? Just a nice steady sideways action. Seller comes back out, pushes it down. Of course, this one, ended up popping up just like the SPY did and rolling right back over. But not that bad of a trade in any case, using some good old-fashioned risk management here. The 10 period still would have kept you in for most of the move, down here at the low of 906, but even, getting short here around the 950 area, potential, not quite 50 cents on a pretty low dollar stock here of $9.50, and plenty of time to make a decision to get out as the 10 period comes into play here. So not a bad trade in AMRX for an opening range break, and had the added benefit of accelerated volume, right? So keep in mind, there were who knows how many patterns looked exactly like this after this time period from the open, but how many of them were pumping 4 times relative volume, right? So, when you see these come out in real time, right? I mean, hindsight's always 20/20, but when you quickly glance and go, okay, 3-month average of 890,000 shares, this thing had already, surpassed that at this time, and we finished the day trading 2.6 million. So that really is one of my favorite metrics, relative volume, as these things are occurring, because, a lot of people use these old school metrics like, I don't trade anything that trades less than 1 million shares a day, or maybe it's another random number like 500,000. Really, who cares, right? Who cares if the stock trades 150,000 shares a day? If the volume's in it today and it's liquid and it moves, and you have these metrics to show you that, relative volume, 5-minute volume, 1-minute volume, and they're all coursing well above 200, 300%, that gives you the confidence to pull the trigger, and the odds rise that the thing is going to move in the direction that you hope it does, right? So a nice controlled down move. And really, what does this really mean when we see a chart like this? And let's look back over at the QRTEA. When you see these types of moves, of course, everybody likes quick down moves, but you have to let some type of pattern develop. This is a controlled seller, and it's not a small seller either, right? Marching it down slowly, slowly, slowly. That's what they have to do when they have large orders to get out. So you can become proficient at identifying these types of sellers, just like, the opposite side on the buy side. So the AMRX was really nice controlled today, and we also had VNE, but this one was a little bit more resilient. So if we kind of kick it back over here to 5 minutes, once again, this little consolidation period here did not last very long at all. You had to be very quick. So 5, 10, this little guy puts in the wick here, we get sideways here for a moment, then this candle comes in, punches that low, and we get a nice release from 1942, about 70 cents there, down to 1871. And boy, this one turned and burned like crazy. Not really anything to compare it to because it was, in a sense, in the hole. But even using the 10 period, if you're short from up here, say you didn't cover down here, once that 10 period comes into play, that's still a pretty good little profit that you could have extracted still using the 10 period as a guiding hand. You would have left a little money on the table, but that's okay. That's something that you should expect to do in just about every trade that you're in. All right. I'd much rather leave money on the table every day and make a little bit than, let this thing go all the way back to break even, right? So protecting profits is very important in any market condition. So once again, not being able to get all of it, but that 10 period SMA still acting as a good bailout point on the VNE. Funny that VNE exhibited a V pattern today. How about that? All right, I saw Fernando's question coming in there. Looks like Steve knocked it out there. All right, well, you know, I talk about what was given today, ladies and gentlemen, and that's about all I got from my opening range break short list today, coupled, with a couple of really good shorts there and one market directional trade as well. So I guess since we got just a little bit of time here, we can take a couple of questions. Maybe somebody wants us to take a peek at a chart. The panel is open. Looks like a pretty good crowd still with us right now. So if you have any questions, want us to take a peek at a chart, go ahead and throw it up there.
Yeah, I sent Fernando a help link to show you that we've got opening range breakouts in many different time frames. So if you read through that, it should help you.
Absolutely. Now we've got a handful of alerts that are specifically configured.
That's the one.
Is that the one you sent him? Okay.
Yeah.
Only problem is there's only a finite amount of them, all the way from the 1 minute to the 60 minute. But once you get past 60 minutes, you're kind of on your own. And that's why a lot of people like to use high and low for those range breaks up or down. And then you just have to eyeball the chart, see how far away you are from that sweet entry point. And of course, as with any type of setup, it's all about the timing and not chasing. All right, looks like it's pretty quiet up there on the questions panel. I guess that's about it for today. Finish up a little bit early today, which is rare, but talk about what the market gives, and if there's not a whole lot out there, there's not a whole lot to talk about. But all in all, I mean, as far as an ideal trading day, today did not disappoint. Today did not disappoint at all. So we'll see what happens for tomorrow. I guess the futures aren't really doing, let's see what we're doing in the aftermarket. I checked before the webinar started, and we weren't really doing anything. Let's just take a peek here. And of course, we're just kind of humming along sideways in the aftermarket on the SPY. But hey, everybody knows things could change quickly. If we get more Trump, tariff, China comments coming in, who knows? I mean, once again, we're not supposed to really care about all that stuff, but it does seem like the tariff and the trade deal that really has been causing the uncertainty in the market. So we'll see what happens come tomorrow. All right, everybody, thanks for attending. Scott, if you're ready to walk us out, let everybody know how they can save a little bit of dough. And I guess we're still technically in the final days of the test drive for those people that signed up a little bit late there.
Yep, yeah, the stragglers for signups for the test drives are still engaged in the test drive. Thanks for joining that. Yeah, on the way out, everyone should make sure that they have a copy of the ebook that Jamie and Steve contributed chapters to. It's got 5 ways to win in a post-BTFD market. So it's 5 chapters for navigating the market in a rocky environment. Just go to trade-ideas.com/ebook and put in your email address, get the download link. We got a podcast. We actually released 2 in the last week, 2 new episodes. So make sure you get those by going to whatever application you listen to your podcast in and just search for Trade Ideas Podcast, add it as a subscription, get the new episodes. Enjoy those. You can look through some back issues for some guests. There's some good stuff there. We've got a code. Save 15% off your first month or year of trade ideas or an upgrade. Spring to AI, just like you see it, all caps. It's case sensitive. Use that before the end of May to save 15% off your first month or year of trade ideas. If you've been in the test drive, you may have gotten a slightly different code. Feel free to use that as well. Jamie is at QuantBot on Twitter. Steve is at TodayTrader on Twitter. You can email us at info@trade-ideas.com. That's the best place to send questions, comments, everything, because it goes directly into our help desk software. Thank you all. We're going to have a recording up later on tonight or tomorrow and send you an email tomorrow from GoToWebinar with a reminder of how to find it. Thanks, Jamie and Steve. Thanks, everyone. Have a good one.
Hey, thanks everybody for popping in. Steve, we will see you tomorrow.
Yes, sir. All right.
All righty. Bye-bye.